Hey, everybody. You're listening to the Mixed Nuts Podcast. I'm Phil Hirsch, along with my pal Richard Marks, here to discuss what's going on in this mixed up world. So relax and sit back, grab a beverage, and a handful of mixed nuts. No telling where the conversation may go. Follow us on all social media and our YouTube channel, Mixed Nuts Nation. You have to be crazy to listen.
Hey, good morning, everyone. Rich Marks here, flying solo today. Phil will be back next week. A couple of matters to just check off here. Happy to report that I have signed on for another year with Pod Populi, producing my podcast. Worked out a deal last night with the founder and CEO, Brian Howey, and looking forward to another year of interesting content and conversation. Phil will be with us next week. This is kind of an impromptu podcast here because an event happened late yesterday into overnight, and it's expressing itself pretty strongly. And those that will be seeing this on YouTube can see on my screen here that we have had what you would call a rug pull in the precious metals market. As anyone who follows this podcast and just knows me from all the other things I've done in the past, we have had a pretty strong emphasis on precious metals. I'm certainly a big believer in them. And, there's nothing like waking up and seeing your net worth take a kick in the shorts like I did this morning. But I'm taking it all in stride because I've been here before. And this has the characteristics of past slam downs. I mean, there was a slam down earlier in the week, honestly, where the price had been spiking on silver, almost unnaturally so, and concerningly so, because I think a lot of people that know this, this space, that you want to see, these kinds of moves, but when they happen with the rapidity that they've been happening in, it just screams that there's like going to be air pockets underneath where there'll be to, people in and then do what they did yesterday, where it had actually reached on silver specifically, had reached a high of 121 and change. And I'm going to see if I can pop their screen up here just for reference here. I'll pop up the, it's moving a little slowly here. Come on, let's do it. Oh, well, the Kitco app is not cooperating. Nevertheless, we're looking at prices right now down at around 97.36 on silver. Gold is hovering above 5,000. And, like I said yesterday, you had silver hit 121, and then now it's finally moving. Here we go. A little slower. Okay, so we just look at like the 5-day. There's been like huge peaks and valleys. Big. I mean, the drop off that occurred yesterday from 121, it went all the way down to like 107. I mean, literally within about 10 minutes. I mean, that is an absolute dump with the COMEX and people buying, all these large commercial banks just buying a ton of short contracts, short futures contracts, selling it off. But then, as had been the case really for the last 4 or 5 months, as soon as there is a sell-off of that magnitude, the buyers come in, and the price actually yesterday closed more or less flat with the previous day. So that was somewhat encouraging. But I did happen to notice that in the aftermarket, that silver started to slide a couple of bucks, then another buck, and then all of a sudden it was down $5. And I knew when I woke up this morning that I was going to wake up to probably a off the cliff dive moment, and that's exactly what's happened. And it's kind of bumping around right now in the high 90s, but you have to take all this stuff in perspective. The last 5 weeks, the closing price of silver has been roughly $10 higher than the previous. In fact, the close on Friday was 103. So, and gold was under 5,000 actually. It was like 49.75 if I recall. So right now I'm looking at gold is with a massive pound down of $350, believe it or not. We're still holding it 5,034, and silver's at 97, 98. So it's like, it's you can't just like, laugh it off and say, well, okay, we're going to bounce back. No, this was done um, really as a kind of sending a message to all those that are in this space that the fight, that they haven't quit yet, the people that are suppressing price, keeping prices lower. And the argument can be made that this is just a classic maneuver by the large commercial banks, and I want to say other central banks and private entities and private family, funds, sovereign funds, you want to call them even, as a way to position to pick up a lot of metal at a much, much lower price. And because it seems like the structural bases that have been built in for gold and silver have been built up over the last 18 months, they seem pretty strong. But if you certainly look at momentum, I mean, yeah, this could be seen as something as what do you want to say, a signal that the bull market now is on shaky ground. I mean, look, perfect metaphor. You think of the bull with all the riders on its back. It's always trying to shake off the riders when they're on the back, and they're going to keep shaking off riders until the bull pulls into the beef processing plant. So if you got strong hands, strong fingers, you can hold on, and you cannot panic and say, okay, I'm done. I got burned. I bought silver at 105. I bought silver at 110. I thought it was going to go to 300. Now I'm never going to ever own a piece of silver again in my life. Gold, forget it. Gold was at 5,600 briefly the other night. Now it's down at around 5,000. I got burned. I was the last person that bought at 5,600. And now it's, worth 11% less. Never again, right? That's the mindset that they're trying to, reinforce. They want you to be afraid to own these things, because let's face it, the system that is against it is the fiat money system. Basically the money system that allows them to print digits on screens and not have anything behind it. And in terms of actual assets that back up these debt instruments, which is what they all are. It's just debt. Everybody, all these dollars are created in essence, at least in theory, by the issuance of bonds, and then the bonds are then bought by the central banks, and they liquefy the banks who are the dealer banks that buy the bonds. Then they sell the bonds to the Fed, which gives them cash to then go out and buy stocks and lend and so on and so forth and fund operations. If you know anything about the economy in Main Street, there's not a whole lot of lending going on. And there's a lot of commercial real estate defaults and bank, car defaults and mortgage defaults. And it just goes on and on and on. There's a lot of, as Jamie Dimon said, there's a lot of cockroaches in the economy that when there's one cockroach, there's going to be a bunch more. So, fasten your seatbelts. This isn't over. So, I wanted to give a little shout out to a buddy of mine, because this guy does some great content, and I'm just going to put his screen up there. Check out Kerry Lutz's Financial Survival Network on Substack. He wrote a great article this morning. I shared it on my Facebook page for Richard Marks. But he also sent me his evening column this morning. I tried to get him on impromptu, but it wasn't really fair. I mean, he may come on as a guest in the next week or so, but he would be the perfect guy to come on, just kind of like hold everybody's hand and walk it through this, because he's got a great perspective. He really does. He gets it. He's seen it before, as have I. Look, 2011, something very similar happened. And even during the COVID era, something similar happened, where we had a move up of precious metals, and then you had an absolute takedown. People were leveraged. People were getting excited. They're, taking on buying all kinds of out of money call options because they thought it was going to go to the moon, whether it's the GLD or SLV, and then now you have SIL and you have other things that are leveraged. And of course, then there's the stocks, the GDX, and then the silver, you have juniors and minors for both gold and silver, where you get these wild exponential moves when the prices are moving up. And I noticed today that even, while the, gold and silver are getting slammed, the gold stocks, which are going to have unbelievable earnings, because all their earnings that most of them are going to report in February are going to be based on the fourth quarter, and with massively higher average costs of sale based on what they pull out of the ground. They have fixed costs per ounce to mine, an ounce of gold or silver, and their return on those investments has gone, 2 and 3x in some cases. And add to the fact that for the last year, they've had lower input costs. The cost of fuel have gone down. So they're in a sweet spot. So I think this is just like a knee-jerk overreaction to the price, the headlines, and it's going to be all over the media that, oh, gold and silver have crashed. Is it over? The rally over? Well, meanwhile, these are still very healthy prices for the miners to be making incredible profits. So I haven't sold any of mine. I mean, if anything, I may add a little bit to my Newmont today. And I do have some covered calls on GDX that are taking a pounding, but they don't expire for another 2 full months. And I think we're going to ride through this, come out much better, probably in the next week or so. This seems like in my opinion, about a 3 or 4 day event. I think we're going to find a new level of support, and then we'll probably start to rebuild. I mean, there are guys like Michael Oliver at Momentum Strategies who have been thrown around, on all YouTube channels that we're going to see $500 by June, $300 by the end of the first quarter. I mean, technically he makes a very compelling case. He talks about past suppression and kind of like a 40, 50-year cup and handle formation that we're breaking out of. And that if you look at your cycle, lows from bear to bull markets, he has like an 8 times multiplier. And he shows that, in whatever 2015, the low for the bear market was about 1,080 on gold. So he's doing his 8 times calculation. And he's saying, well, we're looking at an 8,000 plus gold price, within the next, say, maybe year to 18 months. And silver, he just has it going like a moonshot that it's going to shock you. And so he's gotten a lot of traffic, a lot of play. He's been on multiple podcasts, and he's an older gentleman. He's not anybody to take lightly. He's got a body of work that goes back 30 years, 40 years. So he makes a very convincing argument. But days like today are the ones that kind of have him scratching his head like, man, I better duck and cover today. I don't know. He might. I mean, I don't think he will. I think he'll just be. Hey, this is all taken in stride. The Sesame Street word for the day today is volatility. Yeah, you just need Bert and Ernie. What's volatility, Bert? We'll tell you, Ernie. It's when stocks move way too faster. Anyway, so I'm not that worried. I look at it like, hey, look. I've been a stacker holder, for 10 years. So, I remember agonizing through those, days when, silver was barely above $20 and then it would move up to about 25 and then it would get slammed back down, back to 20. And you're like, oh, God damn it. And you're buying stuff, you're paying premiums. You're saying, gee, I'm never going to get out from under this. And then suddenly you wake up in 2025 and, and in the fall of 25 say, whoa, wait a second. We just took out the old nominal high and holy crap. But like 6 weeks later, we doubled the old nominal high. And then now we're, racing towards 125. And, as good as it felt, it also felt like this is kind of unnatural and that there's going to be a come to Jesus moment where, and I say that tongue in cheek with respect to silver, because anytime I have a friend of mine who, feels really, really weird about owning silver because he's a devout Catholic and he feels like it's almost like sacrilege, or he actually referred to himself as my Judas now because I bought silver. And I go, okay, calm down, relax. I'm sure you're not going to be struck by lightning because you bought silver. If anything, I said, hey, look, silver is God's money, right? And gold, they're God's money. And you're actually, in some ways, you're poking your finger in the eye of those ones that use that silver to betray him, right? On the cross, not to get too crazy and far afield here, but just saying. But anyway, Financial Survival Network on Substack. That's where you'll find Kerry Lutz, and I'm sure Kerry will appreciate me weaving him in with that last bit of dialogue, but he's a good guy. And he has really good content, and he does also an interview show where he has guests on, and he has a lot of prominent people. He has our buddy Andy Scheckman periodically for a quick update of where the retail precious metal market is, and then a whole lot of commentary about geopolitical stuff. So just touching back here real quick, let's see if we got any kind of change here on the precious metals. I think we're still we're still slipping a bit. We're in the yeah, this is a real slow to react here. I mean, I have it on my phone. We're down under 97, we're down about to 96, and I actually have a order to buy a ETF, which I think probably executed about now at that price. So I'll check after the show. But so anyway, just tell everybody if you're on a tall building, um, please use the stairs or the elevator. Don't take the quick route to get off. You know, we're not looking for any 1929 repeat performances here. Okay, this is not the end of the world. You know, if anything, if you've been in this for a while, you know you have really, really solid gains. I mean, let's face it. I mean, we're not even down on gold for the week. We're still up. Now, at some point, you just know that at some point the buyer's going to come in because one thing that has not changed is that the structural shortage for silver, that has not changed. Okay, you can make silver cheaper. You can slam it with all these, um, short contracts to slam the price down. You can do that, but that doesn't make silver magically, fall from the sky like manna. You got to take it out of the ground. It's not an easy process. Most of the easy pickings have been taken. Now, a lot of the silver that's found is done kind of on a peripheral basis. It's with these other miners that are mining other things like zinc and lead and copper, and they find a little vein of silver and they pull it out and they probably, process it and hand it off to somebody that can handle it because they're not really set up to do it. And bottom line is, until silver stabilizes at a much, much higher price, you're not going to get a lot more exploration as far as, permitting mines and setting up the infrastructure. And even then, if you put a new mine into place where you've geologically determined that there is silver, however far down you have to dig for it, it still takes 3 to 5 years before that mine is operational, pulling silver out of the ground. So there's such a long runway of deficit and shortages that, really, this is kind of like a necessary kind of cleansing to get down because to go up to at the rate we're going, yeah, that's the perfect definition of a parabolic move, and those never end well. So I'm kind of sanguine in that this is kind of a necessary thing we have to go through. And when it kind of finds its level, finds its own, like water has to find its level, silver will find its level, as will gold, and then we'll probably start the next march up, next leg up. You want to even look at Elliott wave theory. There was a fourth wave that suggested a correction had to come, and then after that, the next wave will be possibly to a new high that can be sustained and then built upon with basic regular back and fill type maneuvers. But right now, yeah, this is sort of like as much as it parabolically shot up, this is about how far it fell down because the last parabolic move was from around the 70s and then shot into the mid 90s, and then to go from the 90s to the one teens into 120 was absolutely probably far, far, far ahead of its skis. So I'm not really worried about it. Certainly not selling any. And it's funny, what I've been hearing anecdotally through the retail trade is that, well, a lot of local retail shops, coin shops, they're struggling right now because they're really out of money. They can't sell a lot of the scrap and even the junk 90% silver that they've been collecting. They can't move it up to the refiners because the refiners are jammed with it. They're stuffed with it. They're melting it down and turning it into commercial bars to either sell to the COMEX or who knows else. It could be a large corporate interests coming in looking to sidestep the COMEX entirely, like what's been happening with Samsung. Rumor had it that they were in Durango, Mexico, talking to some miners there about basically buying their output for the year or possibly multiple years with the demand that a Samsung would produce, as well as an Apple, a Tesla, Sony, Panasonic, General Motors, Toyota, Nissan. Everybody needs silver. And then you look at the data centers that they're building out all over the place. And by the way, you might look at some strategic utility plays. Look for the utility companies that will be housing or providing power for many of these data centers, and they're mostly in the Southwest. They're popping up here in Ohio too, but there's a lot of them in the Texas market. And One of my holdings has been benefiting for the last 2 years. I mean, I've never seen a utility stock move like it's moving like it's an internet stock, or back in the old, but with earnings and dividends to back it up. So it's really it's a good stock. I'm not going to mention it because I talk my book too much as it is. So, but you can find it. Big player. It's almost $100 a share. So there aren't too many utility stocks that are around $100. But anyway, just I digress there. What I was saying about the retail stores is that a lot of them, they're not buying. They can't buy because, and if they are buying, they're buying way, way behind spot. I mean, I saw that one guy was offering to buy um, basically rounds and junk. The best you could get was like 15 behind spot. So if you had the price at $120 or 115, they'd give you 100. But that's if they're even buying, because most aren't. Most of the smaller guys aren't. The larger guys like Miles Franklin, they're buying from you. We have the capacity, we have the resources to certainly buy back what we've sold you or from others. And you have to go and speak to one of the sales reps, like go speak to Josh Sheckman specifically, and he'll send you their formula, their scheme, basically what the buyback discounts are, premiums. They're going to be behind spot right now because spot shot up so far. And again, everything's going to sort of reach a kind of an equilibrium, and then we'll find out what real price discovery should be. Things have been kind of out of whack and almost frantic for a lot of the coin stores. They can't be buying silver at spot, right, or close to it when days like this happen. I mean, this literally could be a existential event for many coin stores. So, but if you're not in a hurry or desperate to sell, I mean, a lot of the things, another thing I hear anecdotally is a lot of people are liquidating their long-time holdings of silver and gold and scrap and jewelry and stuff because times in the economy are tough. People are trying to make ends meet, and it's one way to raise capital, raise money to pay your mortgage or pay your car payment or put food on the table. And it's a sad reality, but I think there's an element of that it mixed into that whole scenario, why there's so much selling going on. Because it seems like there's a lot of guys on YouTube you can check out and that cover the retail market, and they'll kind of do impromptu phone calls asking what a lot of the stores are paying to buy back. And up until a couple of weeks ago, you could almost buy back, you could sell back, I should say, like the Silver Eagles for just about spot, that because those are always in demand. But now even those are well behind spot, but maybe not so much today. After silver being down $20, I'm looking at it right now, it's down $20. I mean, just you never see such moves to the upside, and just the law of averages. If things go up that crazy, they're going to go down much the same way, and they are. I mean, right now, gold has slipped below 5,000. It's down almost $400 an ounce. I mean, it's just insane. There was a time, remember when gold was $400 an ounce by itself? It wasn't all that long ago. It's down that much in one day. It's just, yeah, this is an engineered rally that's meant to scare the crap out of people, and it's doing a really good job of it, and it's getting people to panic sell. And whether these are the large commercial banks that are all just trying to get out of their short positions, because a lot of them put on new ones. Obviously, I mean, it was ripe for the picking, because if you could put all kinds of shorts on when the price is 110 or $15, think of the money that they're making right now with silver being down to 95. I mean, they're just cleaning up. It's the game they play, But again, this is just all paper. It's just trading, digits on a screen. But when someone like a major manufacturer needs delivery of like what will be probably now a 2 to 3 year supply, where before they were buying mostly just in time. That's the way the nature of the global economy works. You just kind of have your supply chain set up, and you never want to lay too much money into one of your inputs. But if it gets to a point where that input, which is absolutely necessary for the production of your product, becomes scarce and you can't get it, well, then your mindset changes, and then you go turn around and buy like a 3 to 5 year supply, put it in a warehouse, hire a bunch of security guards with Uzis to protect it, right? I mean, because what else? You're going to leave it unattended overnight, not that much money sitting there. So there are all this other carrying costs. So it's just one of those crazy realities like the world isn't crazy enough, right? I mean, with everything else going on. I mean, I'll just briefly touch upon, all the stuff that well you can't ignore, like stuff going on in Minnesota. I know the area very well. My wife is from northern Wisconsin, and she was working in the Twin Cities for many a year, right off Nicolay Avenue, which is where I guess Nicolette. I always say Nicolay, but Nicolette Avenue, and that intersected with that, you know, uh, crime scene that occurred with the ICE agents and the Border Patrol and the Pretty guy, and hard to look at, hard to watch. Everyone has their opinion as to whether it was justified or not. At this point, like I've said in past podcasts, I'm going to refrain from saying anything further because there's nothing I can do about it. I am powerless to impact or affect the events that will be going on in this life. So I'm just going to say, it's hard to watch, but now I've moved on. They're not moving on. There's a lot of stuff going on. I think uh, President Trump and his officials are kind of course correcting. They brought in Tom Homan to clean up the mess and try to get things back into a state of order. And Governor Walz apparently has stopped shooting out his incendiary rhetoric, and the mayor of Minneapolis is toning down his role, I guess. And we'll see how this all plays out because there's all other stuff that's still swirling about with the Somali daycare scandals and all the money that's laundering through there. And now I saw yesterday that apparently not only, is the biggest Somali community in the Twin Cities in Minnesota, but the second largest is in Columbus, Ohio, the state where I reside. And that apparently a similar money laundering operation had been going on there as well. In fact, it's tied to the Minnesota one, where they're now finding that there were some routes and transporting of cash that went through to Minnesota, and then from Minnesota all the way out to possibly the European continent, Amsterdam, and then UAE. So this is a very sophisticated operation, apparently, that you know they're just pulling off layers of the onion here. And in terms of the dollars, yeah, 20, 30 billion, maybe more. Where is it going? Where is it going to end up? Who's the beneficiary of this? Is everybody taking a cut, or all the politicians? Everybody got Swiss bank accounts set up, or they have accounts in the Cayman Islands, and they're all just like pretending that they're all just aghast and shocked that this is occurring, but their hands are dirty, and like many say, okay, well, where's the indictments? Where's the indictments? Come on, Pam Bondi. Come on, Cash Patel. They always kick up a lot of dust, like sound and fury, signifying nothing, right? As the old Shakespearean play goes. That my wife is here, she would start reciting the whole scene. So it's just something she does. God bless her. She has the amazing powers of recall, that stuff. So by the end of the day, it looks like the gold and silver price might be where it was when I first started stacking. Anything's possible, right? No, I don't think that's going to happen. But so just to change speeds here real quick, here's something that I think it's going to become a very, very largely discussed topic going forward. And where did this go? Well, I think I may have, unfortunately, seems to have disappeared. Well, I'm going to see if I can pop this up real fast. I should be able to do it here. Yeah. Kevin Warsh. There's a name. Kevin Warsh. Okay. So on the screen there, you can see, an ad for some fast food place, which of course need to get out of it. But Kevin Warsh has been designated as the nominee to replace Jerome Powell as the chairman of the Federal Reserve. And an interesting tidbit is that apparently, due to all the stuff that's been going on with things in Minnesota, other things related to ICE, there's a little bit of when I say pushback from some of the Republicans that right now that are just kind of like, I don't know, they just kind of acting like this is just out of control, what's going on in the world and in this administration, and what was seemingly a coordinated attack on Lisa Cook and Jerome Powell at the Fed to sort of browbeat them into lowering interest rates. And Ms. Trump is convinced that the prime rate should be at 1%. And on my screen here, the people that will see us on YouTube, you're seeing the Kevin Warsh there, and of course he's got the cool glasses, he's got the shades, youngish guy, like he looks like he's probably in his mid to late 40s. So, Trump likes people that are telegenic, and so this guy looks like he would fit right into the Trump administration. But of course, it's the Federal Reserve. Technically, it's not supposed to be part of the administration. But the rumor has it, and the whole the scuttlebutt about this whole thing is that Kevin Warsh is seen as somebody that will be very subservient to the will of Trump, which means that he will cut rates, may throw all kinds of panic into the bond market because the fear that he's going to reliquefy and it's going to do massive quantitative easing. I mean, just being down at 1% again is at a rate right now that some will say that the economy is really so weak fundamentally that all the numbers that the government's putting out are really just window dressing. A lot of it's affected by the fact that our imports have cratered. So when our imports come way down, the GDP actually goes way up. And there's also a lot of, let's face it, they monkey with the numbers to get the desired number that they want to put out to the public to give the appearance that everything is fine. But if you heard the expression, the K-shaped economy, where you have maybe the top 10% of earners and people of wealth are doing really well, and then the rest are going down. So you have you look at imagine the letter K. You have your wealthy doing better, and you're not so wealthy and middle class. Their standards of living are going down and down and down. And so one way to make people think that no, it's not happening is, we have a 4% growth economy. Well, a lot of it, again, it's manipulated to be such. But I guess the big question is, will Warsh maintain any semblance of independence from what the administration wants them to do? Because let's face it, they want to bring down short-term rates because so much of the debt has to be refinanced, and they want to bring it down at much, much lower rates, similar to where they were when all this money was borrowed. Because right now we're paying over $1 trillion a year just in interest on the debt, which is careening towards 40 trillion just on the national debt. There's other unfunded liabilities such as the Social Security, payments, pensions for the military, and all other government pensions, and Social Security. Medicare and Medicaid. The deficits right now are probably running close to 200 trillion, which obviously will never be able to earn enough money to generate enough revenue in terms of taxation to ever be able to pay back all this debt. So the only answer is you have to print. So you can't default. You have to base the dollar, which is basically like on life support. It's the only reason why it's kept up reasonably high on the Dixie is because all the other currencies around the world are just as bad or worse. And as it is, I mean, look at the current Dixie today, where we are right now. We're at 96.84, so we're up pretty sharply, up 0.66, and it had actually touched below 96 earlier in the week. But still, relative to where it was, even under the Biden was up at 110. So we've had a big drop, almost a 10% drop in the value of the dollar since Trump returned to the presidency. And you can think of all the reasons why that's possibly the case. A lot of it is a lack of confidence in the economy, our local economy, but also the trading partnerships around the world that are being severed due to the tariffs and other, let's just say, changes of tactics and how we perceive our role in the world, where we're trying to more or less divorce this whole globalist movement and international, trade and everything. We're trying to kind of set up our own little, when I say, spheres of influence, having instead of having a one polar world based on the dollar, you're going to have multipolar. You're going to have areas that are dominated by the BRICS and their local currencies and their payment systems. And then we'll have the West, which would be, of course, us, Britain, Europe, Australia, Japan, to some extent, maybe South Korea. Who knows? They may waver. They may end up going over just through expediency with China. But and then Russia, which may ultimately reclaim all their satellites, not so much like a USSR, but more of a trading bloc, economic trading bloc, and whoever is allied with them, meaning, Iran and to some degree, of course, China, because of the financial relationships they have, industrial demand and all that, and then the crude they supply. And they're also, home to many of the other rare earth metals, and also they're, a big food producer. And if and ever they settle this thing of Ukraine, Ukraine will likely, based on the land that they're going to lose, so that it seems they're going to lose, a lot of those areas are going to then be part of the Russian sphere of influence, and Ukraine would probably be better served to just knuckle under, shut up, and just, do what they had been doing for all those years and just be part of greater Russia. But instead of, square dancing with the West, which is just used and abused them. I mean, honestly, they were just basically a proxy to be used in a war to distract Russia so that all this other crap could happen. It's really kind of it's really kind of messed up when you think about why nations do what they do and what their ultimate goals are, what the underlying purpose is. Everybody, they try to sell you a narrative on the mainstream media, but a lot of it's easily just dismissed away when you just dig down and see who are the players. And a lot of these people, surprisingly, are just very, very open and honest about their intentions. You just have to know where to look to see where they make these little policy speeches and they release these white papers telling you about this is what, our plan is for the next 20 years. And this is, we're going to, check off the boxes and get to where we're going. And wow, you look at some of these things, like, wow, they're like 2/3 of the way down the list. They're really moving there. I mean, nothing's stopping them. I mean, the only thing that really can stop them is themselves if they overreach. And there's been a little bit of that, apparently. So let me just get out of this thing. I don't know what this. I was trying to talk a little about Kevin Warsh, but my screen that I had saved did not work. So, let me. I just want to quickly pop in and just do one little thing here. I'll do this thing here. Get back to this, and if I can get rid of this lady, I want to just boom. There we go. Let me get rid of her, and I got rid of her. Oh, and looky there. So, I'm just going to do a quick little pop here for Miles Franklin. I imagine today is one of those freakish days for them where they are probably getting pounded with phone calls from people that are like questioning what's going on. Can anybody tell me, why this is happening? And I'm sure all their sales reps are dealing with their main customers, and they're all, basically saying what I'm saying, that this is one of those necessary cleansing corrections that have to happen to kind of, establish your base and solidify it. And then we regroup and then we move higher. Looking at silver at $94. I mean, if someone told you the price of silver would be $94 on the last day or near the last day of January in 2026, 6 months ago, they would have laughed at you because the price then was like $35. Say, what are you, crazy? That's nuts. How is it going to go from 35 to 95, right? Or dare say 120, right? Well, because there have been all kinds of massive momentum moves that are tied to the scarcity. And we have China limiting exports of silver into the LBMA so they can, deliver on contracts for people that are taking, exchange for physical. They don't want to just settle in currency. They want the physical product because they have a destination for it. They have a need for it. Lack of faith in the system. They want the hard asset. And I don't see this ending. Nothing fundamentally changed this morning or overnight in the world that all of a sudden this is now an invalid investing strategy or wealth protection strategy. I mean, the world doesn't move that fast. I mean, short of missiles are in the air and everybody get under the desk, like that's going to save you, right? So if you catch my drift, this is something that just, I guess it was building to this. And now it's happened. And let's move forward and let's not panic. Let's say, hey, you know what? Dare say maybe you want to dip your toe in the pot, and add a little bit to your stack. If you're thinking along those lines, Miles Franklin would be the ideal place. Sadly, you can see from the screen here, they're having issues with dealing with the processing and shipping of orders like all the others are, because the volume of orders has just been to the moon, and they're doing the best they can. We're not a big, massive, like multi-hundred person, processing company or processing orders. We have our sales reps all around the country, and it's a family shop, as you know, with the Sheckman family, Andy, and now his son Josh and his wife Jean. They're all involved in the day-to-day of running the business. Andy, is prolific on YouTube. He's got his great channel, Miles Franklin Media, with Michelle McCory. All these. So there's been just great growth, and they're expanding their footprint. I'm blessed to be associated with them. I'm very proud to have this relationship with them. As many had heard, I enjoyed a night out with Andy down in Fort Lauderdale at the cigar bar. That was a lot of fun. But we're back to business now. So milesfranklin.com/mixed-nuts. That brings you to the landing page where you see Phil and my handsome faces, and we can help you out. You can certainly reach out to me at mixednuts, the number 2 at yahoo.com. I can hook you up with a sales rep for Miles Franklin, and they can walk you through the process. Very straightforward, very, very competitive pricing. They do their best. They have low overhead, relatively speaking, to some of the other companies, and they just treat you with respect, and they value your business as certainly I do. So I think I'm gonna say goodbye for now, and thank you for tuning in. I appreciate if you've made it this long to maybe follow us on Spotify and Apple and all the other. I found that we're on another one called Metacast. Well, let's see if I can find it here. I'm probably mispronouncing it here, but it's called, no, I got it right, Metacast, Metacast. I actually found the podcast on there the other night, kind of cool. But I appreciate if you could follow and like and leave comments, certainly on the Apple and Spotify. Love to hear what you have to say. And with that, I will wish you all a very happy rest of your Friday and weekend. And we'll see you next week. And I expect my buddy Phil will be in tow with me, and we'll take it from there.
Hunter's Blend Coffee, premium coffee for freedom-loving Americans. Many coffee importers view the world very differently than you do, and would support lobbyists that fight against the Second Amendment, hunting, and our God-given freedoms. No matter where you buy your coffee or who roasts it, someone had to import the green coffee beans. Well, we are the coffee buyer, importer, and roaster. So from the farmer to your mug, you can feel confident that your morning coffee has been safely in the hands of patriots. Hunter's Blend Coffee.